Hi everyone! The Christmas season is just around the corner and many markets will be closed in the coming days. Speculators are making their last trades before the holiday. Watch our video review and find out the highlights of the Asian session. In yesterday's video of the US session, we discussed an increase in US GDP for the third quarter of this year. The actual reading turned out to be higher, and traders took notice of this report. Since yesterday evening, the US dollar index has dropped to 96 points. Partly it happened because the greenback failed to break above the resistance level of 96.55. forming a false breakout with a pullback. A similar situation has already been seen between December 16 and 18. So now the US dollar is likely to resume the downward movement. The dollar-yen pair is testing the historical resistance level of 114.20 to ensure upward movement. However, the pair retreats from this level quite often. Analysts believe that this time will be no exception. This is why it's better to be ready for a correction to 113.80. It also seems reasonable in the current situation. Moreover, the US dollar index temporarily held its rise. So, now currencies traded against the US currency may take any direction. The forecast for the Australian dollar is quite similar. The AUD USD pair also reached a strong resistance level of 0.7220. However, a strong pullback looks unlikely. Analysts believe that after a slight decline, the pair will try to climb even higher, so it's too early to talk about a trend reversal of the pair. Meanwhile, traders are digesting US macroeconomic statistics. The country's final GDP estimate for the third quarter grew by 2.3% in annual terms. The indicator beat expectations. Analysts predicted the reading to remain unchanged at 2.1%. The US Consumer Confidence Index for December rose to 115.8 from the revised November figure of 111.90. The reading also turned out to be significantly better than the forecast. Home sales in the United States secondary market in November increased by 1.9% to 6.46 million, which is slightly less than expected. Analysts also warn about the traditional weakening of the US currency by the end of the year and the thin market before the Christmas season. And that's all for now. Thanks for watching. Share your thoughts with us in the comments down below, as we are always open for discussions. See you in our next release.